thanks everybody for joining. We're going to jump right in. We're talking about basically what's going on in the market, and basically what buyers and sellers can potentially expect over the next couple of months as we, get into the spring market. I see I got some real estate professionals on the line too. Besides, myself, I see, Dinesh out there. So I want to give a big shout out to Dinesh. Thanks for joining us, man. So just to throw it out there, what are you guys seeing in the market? And I'll give my 2 cents too. And, I want to put it out there to the audience as well. How are you feeling? What are you seeing? Anybody have any thoughts? I mean, I can jump right off. I think it's been pretty volatile. I think volatility is really been what has been happening in the market. It's been, a lot of this up and down. It's been pretty I think challenging for folks who are looking to buy a home, especially for those who were, looking maybe 6 months ago and they were unsure and they saw the interest rate creep up. We're having a lot of folks who are, sort of feeling bad about that and reluctant to get into the market because they're not sure where things are going. So we're seeing a lot of, uncertainty, not just in the numbers, but also just in the mindsets of folks. And I don't know if that's what other people are feeling or seeing out there.
Sorry, I'm a little under the weather, but yes, it's definitely a slow time. And it seems that there are not many houses for sale. So that's that's also complicated matters as well.
Yeah. I mean, I don't know. So I see, Matt, thanks for joining us, and it's always great. So got a lender's opinion here too. Matt, we were just asking what people are seeing in the marketplace and what their experience has been. Dinesh, he's noticing things slowing down. For him at least. What are you experiencing in the marketplace? You're local here.
What am I seeing? I'm seeing, just a little bit of a mismatch between where buyers think the market should be and where it actually is. And you would think that, okay, interest rates are up. They obviously went up all last year. Unfortunately, they've gone up, I think, the last 4 straight weeks. So you would think that would mean sort of lower demand and maybe better prices for these buyers. But what we're seeing is really just prices holding steady, maybe even going up. For good properties that are well presented and well priced, we're still seeing multiple offers. I think people are scratching their heads at how that's still possible given the last few years of that. It's definitely not as crazy as it was in the second half of 2020 and in 2021. But I mean, you're still seeing multiple offers. You're still seeing people waiving contingencies to get properties, and there are fewer buyers in the market, fewer qualified, motivated, interested buyers, but there are also a lot fewer sellers. And that's what's kind of driving prices higher, is that you look in certain zip codes in certain areas and there's just very little for sale. And I think that's due in large part to people who have interest rates at the 3% or less, that might want to move but don't feel like they can move because they'd be buying a more expensive house at a higher interest rate if they did move.
Matt, question. Do you see a crisis point or a tipping point coming as it relates to housing prices and affordability? And what I'm getting at is that at what point do we start to get to a potential crash, because the interest rates are going up, prices are conversely not going down the way you would expect them to, and they're continuing to go up. So at what point does that really start to, like, we're already seeing constrictions in the marketplace, but at what
Yeah.
point do we see a complete shut off in the market?
Boy, it's just a real, like I said, you'd expect that, okay, money's not as cheap, there's fewer buyers, and so, the market will soften. But, with the caveat that nobody knows anything and we're sort of just speculating. I mean, think about, if rates, let's say rates are 7% today, which is, they're closer to 7 than 6 today. But, let's say they go to 9%. I mean, that's kind of scary to think about what that costs. I wonder, there's going to be even fewer sellers, I think, and there'll be fewer buyers, but I think that there will still be people that need to move for family circumstances. And you know what I'm saying? What we need is almost more in the same amount of buyers and more inventory. And I just don't know how we get more inventory until we get rates to go back down.
And part of the reason why I'm asking this line of questioning is because what we're starting to see, not just a constriction in the marketplace, but in the employment associated with it. So you have big commercial lenders they're laying off whole departments. So commercial lenders are downsizing. You have independent brokers that are going out of business, and you have real estate agents who, not doing the numbers, at all. So everybody's kind of, it's getting real lean, financially. How much longer before, how much more runway do we have here before this becomes like completely unsustainable for the real estate market itself as a whole?
Don't know the answer to that question. Oh, someone's got their hand raised, but somebody was asking me yesterday, is this, we're going to see a crash or is this a bubble? Yeah, we did a home buyer seminar yesterday and someone asked me if it was a bubble, and I suppose that's possible, but I don't think so. I mean, if you're looking at the last bubble and trying to draw comparisons, the last bubble was
underlying mechanics are totally different.
Was no income, no assets. Exotic dancers in Las Vegas, buying 2 and 3 houses, right? And we don't have that this time. I mean, can you buy a house with very little down and a mediocre credit score? Yeah, you absolutely can. But it's not, the credit standards haven't changed that much. And it's not the way it was. So I don't know that it's a bubble that's going to burst in the way the last one did.
Lorraine, do you want to go ahead? I see you
Thank
have
you.
your.
Yes, thank you. So, I mean, here's me saying, I'm only 32, no, just kidding, but I've been in the business for 33 years and I have seen 2 cycles. And when I bought my first house, which was a townhouse a long time ago, in the 80s, interest rates were 13%. That's what I paid. And interest rates went up and at that stage, when we bought a rinky-dink little townhouse in Annandale, Virginia, we had multiple offers. And at 13%, we bought it. Then interest rates went higher. They went right up to 18%. And I think for a short spell, they were 20. But like I believe, people will still be moving, divorcing, dying, being transferred.
Yep.
Houses will always be there. There will be sellers. There will be buyers. It's just a question of mindset. Very candidly and humbly, I have 8 listings, right from a price point of just under 3 million to a little townhouse that is 450. And, you put it on the market or it's coming soon and people are trying to finagle their way and try and get in and say, well, we'll buy it sight unseen, et cetera, et cetera. Again, it's pricing, it's, just us as agents. And again, I'm sorry, I jumped on late, so I wasn't sure. I just got notification, join this call, so I did. But I believe it's just the mindset and demonstrating value and seeing what it is. And if interest rates, they can go up, but you also have the opportunity to build equity, God willing, and also refinance. So I'm not so sure that it's Chicken Little, the sky falling. The sky is not, and I feel that to a certain degree we're insulated in this area because of the government. So those are just my 2 pennies.
Great points, though, Lorraine. You took the words out of my mouth about the insulation being in this general area. I think for some folks, it probably feels like the sky is falling. Because if you look at the month to month, and I'll share some, some stats with you, I can screen share. We're seeing that when you look at the numbers over the month to month, they are very volatile, and we are seeing some major slides, but we are also seeing, when you look at it overall year over year, the change is actually very, very, almost not nil, but it's small. And so I think that to a degree, everybody is called it correctly. I concur that it isn't that the sky is falling. It's that things are happening. And to use your word, Mohammed, you said, at what point, where's the tipping point, and where's the crash, or when does that happen? And versus, I don't know that I would call it a crash versus a cooling, because, whenever there's a crash, we're seeing, historically, you're looking for, prices to drop, up to 30%. We're not seeing that overall. So, I think, less a crash, more of a cooling. I think, that's for 2023. As we move into 2024, and we know that Joe Biden is spun up about the SBA and is going to be coming after a lot of people. We know that student loans are a mess right now. They're still in default, or in what is it called when you don't
Forbearance.
have to forbearance
Deferments.
for many people. So when these things start to, kind of go away, or when those shifts happen, I think it might cause more pressure. I think we still are seeing fairly low inventory, but much better inventory than we had. So, let me pull up some charts, and then I'll get some commentary from you guys. I want to know what your thoughts are, because again, these are conversations that are going to be archived, but there are people on the line who are going through this right now who this is really helpful for. So I'm going to share my screen, and I'm not the expert on this, but give me one moment. Okay, so can you guys see my screen?
Yeah.
Okay, good. So just to kind of talk, macro level really quick, this is pulled from the National Association of Realtors. Okay, so that's where I got the information. And this is on existing home sales. So we're talking about resales or homes that already exist, not new builds. Okay, just so everybody understands. And the highlighted are the years past. And if you come down here where my mouse is, you'll see last month, okay, and we see year over year. Now, nationally, I just shot myself in the foot, because we're seeing that year over year, the existing home sales are down majorly from last year. Okay, this is nationally. Okay, but so I say that, but when you look at the year last year versus this year, we're not seeing, hold on, these numbers are confusing me. Okay, what am I looking at here? Okay, and existing home sales in 2022 versus last month. Okay, so month over month, we're only down about 0.7% versus last year to date, the existing home sales are down 36.9%. That's a pretty major shift. So it feels like the sky is falling when you look at those numbers, right? Because this is looking at the nationally on a whole. But whenever you look at it in a more local level, and we'll show you, it starts to, level off. Okay. So let me do that right now. This is just for Montgomery County. I pulled these from GCAR. So it's Montgomery County. I think I also have Washington, D.C., and I have an NVAR chart. So in Montgomery County, when you look at from December 2022, right? So that's looking at, not that long ago. We see an increase, right, of 48% for new listings. That's a big jump, right? But whenever you look at from January 2022, that's a much longer view. You see the change isn't as significant, right? And I don't know what you guys think about these charts. I mean, it's kind of up and down, so it might even be hard to follow. Okay. This is Fairfax County. When you look at year over year change, almost nothing in the condo market in Fairfax County. But whenever you look at the month over month, you see a different story. Single family homes. This is in Arlington. We're seeing year over year only a 3% change. It looks a lot different than the national, right? The inventory, as far as year over year, we're seeing less inventory than we did last year in our market. And anybody can chime in anytime, but I just want to show some of these numbers about how, like, for, Lorraine, whenever she said, the sky isn't falling, it's true. But when you look at it on a national level, it kind of seems like it. And that's kind of my point here.
The higher prices, as prices kind of keep going up, you're hearing about bidding wars. I'm talking to my colleagues, and their clients' offers getting bid out or beat out. But do higher prices sort of inspire sellers who are like, I don't really want to sell. I don't want to have to buy, something else and borrow at 7%. But if they see their neighbor's house selling for maybe a lot more than they expected, does that prompt them to sort of say, well, maybe I can do it. I'll have a big enough down payment. Does that get them in the market?
What are your thoughts on that, Mohammed? Do you have any thoughts?
Yeah, for the right buyer, I think it does, but that motivation really, has to be strong. So it depends on what situation, the buyer is in. The seller is in, what stage of life, if they have kids, if they have to deal with schools, if they see something that they like, have potential, their job situation, relocation, it's a lot of factors that fall in when it comes to a seller that's, potentially looking to be enticed into the marketplace. I think that folks that are in later stages of their life, retired or things like that, are more easily enticed when they're looking at a house that has significant equity and things of that nature. But it really just depends on, where that seller is in their stage of life, and what factors are influencing kind of their life at that point in time. So that's a long way of saying it depends.
Yeah, my opinion right now is that, because I think that's the major question that a lot of folks have is, is now the right time? And I think it really depends on you as a person. I think, to try and time the market at this point is going to be really difficult. I think that, overall prices are still up. I think it's still a seller's market because of the low inventory that's helping to prop that up. But inventory, we saw that it is increasing. Whenever you look at it in the short term, that means there's a huge influx of people that are starting to come into the market. That's my assessment. Inventory is still low, but there's way more than there was, 1-2 months ago. And so that's, going to be a factor for sellers. I think it's good for buyers because we've seen prices come down in some ways. And that's relatively speaking, because it was crazy high. So, it had to come down a bit and step down. So whenever there's a price cut, where it used to be unheard of, now we're seeing it because you have neighbors who are trying to jump into the market and get what their other friends have gotten, and they don't have as good of a house. That used to work, where it didn't matter. Houses were selling, and if it was in the same neighborhood, it automatically almost increased. That's not happening now. If you don't have it priced right, or if it's not a good product, it will sit. And so we're seeing, houses sit for days on end. So contingencies are coming back. Pricing has to be right. I think there's a lot of volatility in the market. So, if one doesn't like the pitch, definitely don't swing at it right now. And make sure that you're making decisions that work right for you. That's my take on it. Are there any questions in the audience? Because we're pushing 6:30 already. I know that happened fast, but I do know that we have some buyers in the audience, and we have some, real estate professionals. So we've got the gamut. Does anybody have anything on their mind or questions?
Yeah, I was just gonna to add one thing here with regard to sellers. I think as sellers right now in this marketplace, they have less of an impetus to sell because a lot of sellers, at least from my experience working with sellers over the last couple of years, as the market has been kind of crazy, is that if they're not in a rush, they're like, well, I'll just wait and see, because they don't want to be in a position that the buyers are in right now. You have some sellers who are, again, because of their circumstances, they're motivated to sell. And like Matt said earlier, you're always going to have people buying and selling. You're going to have children being born, births, deaths, all kinds of things that influence, people's need to change their housing dynamic at that particular point in time. But it's not like it was 4 years ago, where the market was super hot, and as soon as a property went on the market, you're able to sell and then turn around and purchase something else with interest rate that's below 3%. So I think sellers right now are a lot more cautious and are kind of like taking their time.
Oops, I'm muted, but the one number that we pay a lot of attention to is the monthly supply index. And right now nationally, it's above 3. Which means that it's shifting over into a buyer's market. So, that means that if all the houses were, to be on the market, it would take about, 3 months for them to sell. But whenever we look at that locally, we know that that's not really the case, right? So that's these numbers. Be careful where you get your numbers, because, locally things look a lot different than they do nationally, and this is one of those times where there is kind of a divide. In our area right now, the inventory is still fairly low. It's still a seller's market. That inventory is increasing, so steadily. So sellers, just know that you're going to have competition. Price it correctly, and if you do, it's always going to sell. Even in a down market, people are still selling homes for great prices. We had some all-time highs, and prices are off of those all-time highs. So even though we're seeing declines, they're still high whenever you're looking on year over year in general. So I would just say roll with the punches. I know we're getting ready to end the call, but don't try and time the market, because, you know, right now interest rates, even though they're high and, you know, they've been coming down a bit, even if they go up some more, which we can't anticipate because, you know, the person who is, you know, holding the keys to the car right now is Jerome Powell, and he's fighting interest rates, and the only way, or fighting inflation with the interest rates, and we can anticipate he's going to increase the interest rate probably a few more times, which is going to probably squeeze everybody a lot more. So I think that the sky isn't falling yet. So, you know, you're doing fine, I'm sure. Just hang in there. What are your takeaways, guys? Anybody? So I guess that might be the word of the day, is to roll with it. You know, that
I think
there's
Lorraine had it right.
volatility.
Yeah.
There,
I think,
Go
I think
ahead,
Lorraine
Matt.
said it right. You know, people, I think Lorraine had the right attitude. You know, you know, people aren't going to stop buying. They're not going to stop selling. Sure, there's fewer of them, I suppose, but what sort of choice do you have? You know, so you sort of play the cards you're dealt, and it's a saying that we trotted out a lot last year, but marry the house and date the rate. You know, if the buyer, you know, can stomach the payment as it is today, and maybe cut a few things out of the budget, you know, that payment is mostly fixed. And even if it's an adjustable rate, it's fixed for 5, 7, or 10 years. And, you know, with rates where they are, the chances that you'll have a refinance opportunity in the next few years, I think, are pretty good. So, yeah, marry the house and date the rate.
Okay, marry the house, date the rate. And as far as, you know, we got a minute left. So going into our spring market, do you anticipate that it's going to be a buyer seller market? What's the consensus?
Buyer market.
Buyers are going to see their day in the sun. I think I agree with that. I think we're going to see contingencies come back. It's still not going to be, you know, a cakewalk. There's still going to be competition, especially in our DC metro area. But I think it's going to be better for buyers for sure. Tougher for
Okay.
sellers.
That's good news. I like that.
I think it's going to be a normal market. I think it's more normal. So we'll breathe as realtors. We can negotiate, we can talk, as opposed to let's get, you know, multiple offers and go
Waive
crazy.
everything, and yeah.
Yeah, it might be
Name
boring.
my
What do you
kid
guys
after
say?
you, sort of thing. Yeah.
Yeah, it's gonna flatten out. So if you're a buyer in the market, then you can feel a little bit at ease. If you're a seller, then you want to, you know, map out your strategy well. As also too, your exit strategy once you leave. What are you going to do, because you're going to be subject to this market with the high interest rates. So, but we're the Bates International Group, and I appreciate everybody for coming by. We're at 6:30. We're here every single month, the first Thursday of the month, with the same link, and we try and keep it to 30 minutes. So we appreciate everybody who came by and participated. If you want to leave your information in the chat, feel free to do so, and we have folks that'll grab that information. If you have any questions that you want to see on other roundtables, you can also leave that in the chat, or you can email us at info@thebatesinternationalgroup.com. So appreciate it.
Good work. Thanks, Ebony.
Thanks, everybody.
All right. We'll see you guys next month.